Hello everyone, how's it going? Today's video is about SMT divergence and strength switching. This is a very important topic. I got a ton of requests to make this video and here we are today. But before we go right into the strength switching, let's take a look at what SMT divergence is. This is when there is a cracking correlation between two correlated assets. It is defined by strength, where one asset reaches a key level and the other correlated asset fails to reach that same level before reversing. This will form an SMT. Assuming these are two correlated assets, this might be NQ and this is ES. You see that NQ trade into the key level in reverse, but ES reverse without trading into that key level. So this will form an SMT divergence, right? Or this might be GBP USD and this Euro USD. You see that GBP USD trade into the key level in reverse, forming a lower low in reverse, but Euro USD will form a higher low before reversing, so it will fail to manipulate this key level. And note that we only look for SMT divergence at key level, right? You don't just want to see an SMT at any random level and you look to trade it. No, it must form at the key level. And there are only two key levels that we use when it comes to SMT divergence. We use the swing point and the fair value gap. You don't use the other block. We don't use inverse fair value gap and we don't use proportion blocks or any other key level. We use only the swing point and a fair value gap. You want to see an SMT form from a swing point or it formed from a fair value gap. And this is how it's going to look like. If you are using a swing point, it will form like this. The stronger asset will manipulate the swing point and form a higher high in reverse, while the weaker asset will reverse without manipulating the swing. So it will form a lower high. This will form an SMT between these two correlated assets before reversing. And know that if all assets are reversing, then they are going to trade to the draw on liquidity. And it will look like this on the fair value gap, where you have the stronger asset trade into the fair value gap, form a higher low, but the weaker asset will reverse without trading into that fair value gap. So it will form a lower low. And if all assets are reversing, then they are going to trade to the draw on liquidity. But now, what happens if all assets are not reversing away from this key level, right? What happens if we get the manipulation, but the candle that manipulated, be it on this asset or on this asset, did not close at a reversal candle as it is now? If it doesn't close as a reversal candle, that is where you are going to seek strength switch, right? You are going to seek another manipulation and that will happen in the form of strength switch. And there are many forms of strength switch. And we know that if the asset manipulate and doesn't reverse, you need a strength switch. And in a true reversal, we want to see the stronger asset momentarily switch strength and become weak to catch up to the weaker asset, right? This is what I'm talking about. If you see here, you see that this asset that manipulate is a stronger asset. That means it will have a wider range to cover in order to reach the draw on liquidity as compared to the asset that reverse without manipulating the high, right? So you'll see that the distance from this current price level to the draw on liquidity is not as wide as it is on the asset that manipulated. So this asset will need to switch strength to become the weaker asset in order to accelerate into this draw on liquidity, in order to catch up to this draw on liquidity. So that is the purpose of the strength switch. It will need to catch up to this draw on liquidity because all of them will need to deliver at a certain time of the month, of the week, of the day or hours, right? Price will need to deliver to the draw on liquidity. That is how the market algorithm works. If it's going to deliver to this draw on liquidity at 9:30 and this asset is a stronger asset, you'll see that at 9:30 it will momentarily switch strength to become the weaker asset in order to catch up to this draw on liquidity alongside the weaker asset, right? So that is where you have the strength switch coming in. And there are many ways to measure strength switch between correlated asset. We have one, the swing point, we have the candle close, we have gap size, we have gap fill. Starting with the swing point, we have the swing point. This will be the two-stage SMT, right? Like I told you, if the asset that manipulates close as an expansion candle, you can see here on this asset close as an expansion candle. This will already tell you like, okay, you are going to get another manipulation, and that will happen as strength switch, where you see the asset that manipulate from a higher high will momentarily switch strength to form a lower high. So you'll have a two-stage SMT, and this will be the trigger for the reversal, right? This will be the trigger for price, this asset to catch up to this draw on liquidity. You see the asset that form a lower high will momentarily switch strength to form a higher high. So this will be a trigger for a reversal away from this key level. And we have our second form of strength switch, which is candle close. It will happen like this, where the asset that manipulates the high, the swing high, or maybe the fair value gap will CSD first, because you know this asset that manipulate is a stronger asset. but instead it will CSD first. That is, it will display below the series of up close candle or an up close candle. Like in this example, it will CSD first. It will display below the low first, while the weaker asset will have trouble displaying below that low. So this, you'll see already that this is signaling that this asset is going to trade to this draw on liquidity. So you have a strength switch here that this asset should catch up to this draw on liquidity alongside this weaker asset as it is trading to the draw on liquidity. So we have our third form of strength switch, which is gap size. You'll see in this example that the asset that you'll see like in this example, the asset that manipulated will form a higher high, and you'll have displacement after fair value gap that form after that will have a bigger gap size as compared to the weaker asset, right? The displacement on this stronger asset will be much energetic as compared to the displacement on the weaker asset. So this will already be the strength switch, right? This is signaling that this asset now is catching up to this draw on liquidity in order to deliver at the same time that this weaker asset is going to deliver to the draw on liquidity. And we have our last form of strength switch, which is gap fill. And this will present itself like this in the form of universal sequence. And a big shout out to GXT for this. Actually learn all of this from Garrett, so a big shout out to him. You'll have the asset that manipulate the initial high, right, form a higher high, but it will momentarily switch strength and form a secondary SMT presenting a lower low, right? While the asset that form a lower high will momentarily switch strength to form a higher low, giving room for the stronger asset to catch up to the draw on liquidity. And I intentionally choose to use this example where the key level form only on one asset. This is to tell you that the key level or the fair value gap doesn't have to form on both pairs or assets. If it forms on one, then you can reference it on the other pair or asset, right? So you can see here, we have a manipulation from this initial high. We had displacement after that. That displacement from what? A fair value gap, but we still have our draw on liquidity open. Maybe this asset, the weaker asset, already delivered to the draw on liquidity, right? But now this stronger asset need to catch up to this draw on liquidity, need to trade to this draw on liquidity. What will happen? This weaker asset now will momentarily switch strength and become the stronger asset, giving room for this asset to switch strength to become weaker asset in order to catch up to this draw on liquidity, right? This is where you have gap fill, strength switch. So having this all, we can go through some examples on the chart to see how we can further solidify this concept. All right, guys, we'll take some examples here. I'm using the Forex market. Just to mention, whatever I teach here is not limited to Forex market alone. You can actually use it in the future market, crypto market, or anything that moves, you know, in as much as price move, these concepts are applicable. So, and to be honest, I just wanted to use this opportunity to say thank you to those of you who have subscribed to this channel, and especially to those who share the videos so we can reach more people. I really do appreciate that. I don't get anything for making these videos yet. So just by sharing the video, commenting, liking, so it actually motivates me a lot, and I really want to appreciate you for that. Thank you guys a lot. I really do appreciate that. And for those of you who haven't subscribed yet, I highly recommend you do that so you'll be notified each time I upload new videos. You don't want to miss any of that. And I really hope we can get to a point where there are a good number of followers that will make me to consider creating something like a Discord group where we can get engaged, actually share ideas and stuff like that. We can actually maybe be trading together. But for now, I'm just on YouTube, you know, I just want to give you. But when we get to a point where, okay, I see like, okay, we're good now, and some subscribers gonna motivate me for that. But when we get there, I will do that. So without any further ado, let's go right into business. We'll take some examples here. I do want to start from here, somewhere around here. I just want to show you what happened before price had to engage with this high here. You can see that our recent key level, we engaged with this high after this. And let's take a look at what happened. How did we get there? All right, you can see we manipulated this swing low, which is a relevant key level, right? We manipulated it, this swing low here, and form an SMT. You can see that the time where GBP USD makes a lower low from this key level, Euro USD actually makes a higher low. So there is an SMT there, and after the SMT, what happened? They both assets reverse away from that key level. So that's a good thing to see. But after price engage with this swing, with this key level, what's our next target? The opposite side of the range, right? Because there's nothing here within it to target except this fair value gap. And once we inverse that fair value gap, what will be the next target? This high. And you can see that after we manipulated this low from an SMT, there is not strength switch here before price delivered into this fair value gap and inversed it. So we actually didn't respect this fair value gap, right? So once we close through it, then you can be looking for price to trade into this next key level, which is this high, this swing high, right? Now look at what happened. We had a gap filled strength switch here. We have it here. Let me first of all mark that out for you before I can explain it to you. You see that this asset right now is a stronger asset, right? Because it failed to manipulate this low, but the GBP USD is a weaker asset. It manipulates this low. But before even this gap filled strength switch, you can already see something signaling a strength switch within it. Look at this expansion, this weekly candle, how they formed on GBP USD. You see that we had a much energetic move away from this key level on GBP USD than we did on Euro USD. So you already see like we had already a strength switch, right, on our way to this draw on liquidity. So that is price trying to balance this correlated asset, right? It needs to catch up to Euro USD so they can both deliver to this draw on liquidity at the same time. Because you see, the same time where Euro USD is delivering to this high is the same time where GBP USD is delivering to this high. So it needs to switch strength to become the stronger asset in order to catch up. And that actually got confirmed here with this gap filled. As we engage with this low, right, from an SMT, we had displacement away from it. And after we got displacement, what did we got? We had a fair value gap right here, a key level. Right? So if you manipulate and get displacement from a fair value gap, you want to see another SMT retracement into that fair value gap from an SMT, then that is when you get the delivery to your draw liquidity. What time did we deliver to this high? It was only after we had a strength switch, right? You see that Euro USD momentarily switched strength to become the weaker asset in this key level before we could deliver to this high. After we manipulated this key level, which is a fair value gap, and as I did mention, the fair value gap doesn't have to form on both pairs, though it did here in this example. If you form just on one, you can reference that on the other pair. So you see that we retrace back into that fair value gap, form a strength switch, gap filled, then we deliver to our draw on liquidity. So that's the first example we have here. First, you have to engage with the key level, right? This strength switch could actually maybe happen just here. In some cases, it will manipulate, then have a second stage manipulation in the form of strength switch, where this asset will form a higher high like this, and this asset will form a lower low. This asset will form a lower low. So this will be a strength switch. But in this example, we have a universal sequence strength switch, which is a gap filled, right? So we manipulate from an SMT, expand away from it. We had displacement followed by a fair value gap. Then we retrace into that fair value gap, had the strength switch into that key level, then price deliver to a draw liquidity, right? So that's the example we have here. And after we engage with the key level, what happened? We return back to this low. Now, we didn't just return back to this low on both assets. We form what? A two-stage SMT. Again, take a look at that. It wasn't just a random delivery into this key level. We had a strength switch. You see this asset, this initial SMT here or manipulation, we form what? A higher low here on this asset, then a lower low on GBP USD. But now, after engaging with this high, we did what? We reverse away from it and attack the opposite side of the range, which is this swing low, and we formed what? An SMT. Now, if we are going to reverse away from this key level, which we have engaged with, we need to switch strength, right? If we're gonna reverse away from it, let me take this off. So if we're gonna reverse away from this key level, we need to strength switch. The asset that manipulate need to show signs that it is willing to reverse away from it, because you don't just want to see an SMT on a key level. Now you have to pay attention to the asset that manipulate that key level. If the asset that manipulate doesn't show signs of reversal away from that key level, then the weaker asset will not reverse. If the stronger asset that manipulate the key level doesn't reverse, then the weaker asset is just going to catch up to that key level, right? So what can you notice here? You'll see that we manipulate this swing low here and had a strength switch. there is a strength switch here. You can see that, right? We form a lower low here, and at the same time we momentarily switch strength and form a higher low, where this GBP USD is forming a lower low, right? So we have a strength switch here. Now this strength switch becomes a trigger for price to reverse. The same thing that the strength switch right here became a trigger for price to expand into this draw on liquidity here is the same reason that this strength switch SMT right now is triggering this reversal, which is the current week or the previous week candle. This is where we are. So this is the previous week candle. So this is the reason why we had this expansion back within the range, because we have manipulation right into a key level. We had a strength switch. Then what can you anticipate the next week to do? It should expand into the internal range liquidity. So this is the reason for this expansion back within the range, because we had manipulation, we had a strength switch. A strength switch is a trigger for this reversal. Like I said, the asset that manipulate need to reverse. If the asset that manipulate doesn't reverse, then the weaker asset is not going to reverse. The other asset will not reverse. So you need to pay more attention to the asset that manipulates. What is it doing after manipulation? If you manipulate and reverse, both assets are reversing, then they are going to reverse and attack the opposite side of the range. But if the asset that manipulate, after manipulation is just consolidating or not reversing, then know that the asset, the weaker asset, is going to catch up to that level. It's going to also trade into that level. It is not going to reverse away from it. But now in this example, we have what? We had a manipulation, then a strength switch, which is a trigger for reversal. So right, that is why you had this weekly candle expand back within the range. That means price now can return back and attack this high, potentially going back to this high. So we're going to look into this weekly candle, because if you're here last week or the week before this candle and you see this strength switch, you can already be anticipating this week to do what? To expand into this fair value gap, right? This will already be your target. This will already be your target. So once that happens, you're not surprised, right? So I want us to profile this weekly candle. Look inside of this weekly candle and see how we could have traded it, the profile, right? How could you have engaged with price on Monday? How could you have traded Tuesday? How could you have traded Wednesday, Thursday, and Friday, knowing that this week is going to deliver into this fair value gap? So we look into it on the daily time frame, and I think we got here. Since we already manipulate and had a strength switch, I don't expect to see price return back to this low because it already manipulated. So I just want to see expansion away from it. But I also want to see the wick open, trade into a key level before expanding, right? You need to put its low from a key level. And we have a swing point here with the previous weekly candle low, which is Thursday, not even the previous weekly low, Thursday low, right? So we had a swing point there. So we can see Monday open, manipulate the swing low, then return back within the range. So close back within the range as a reversal candle. So we already know like the low of the week has formed already, right? With the Monday candle. So we're having a classic week expansion. Oh shit, I think I should bring that back. It should actually be weekly open. So this is the weekly open here. The week open there, Monday. So we open, trade, manipulate this low and close back within the range. So that tells you what we can anticipate Tuesday to expand towards our drawn liquidity, followed by Wednesday into Thursday. So you already know, once you see Monday close as a reversal candle confirming the low of the week, then you can trade Tuesday towards your drawn liquidity, adjusting your target, right? Because you'll be targeting what? Monday's high, potentially maybe Thursday high. You wouldn't want to target your weekly high on Tuesday unless maybe you kind of like want to swing trade or something like that, or you want to hold the trade onto this level. That's fine with you, whatever you want to do. So we'll look into Tuesday and mark the Tuesday candle. So once you know that okay, Tuesday should be an expansion candle, you need to profile it, right? How do you want the Tuesday candle to form? It should open, trade into a key level within Monday's candle, form an SMT in that key level, then confirm the low of the day and expand. And you profile the daily candle where on the 4-hour time frame, right? So we drop now on the 4-hour time frame. Why is this like this? It should actually start from here. Anyways, I don't know why it's not working on this pair. We'll confirm that. Just use it. I don't want to waste too much time here. So we can see the day open here, the 1700 candle. So let me put that here. So the 1700 candle open and just consolidated within 1300 candle. We didn't trade into any key level, right? But we already reacting from where? From a fair value gap, which is a key level where I want to see the low of day form from, right? So we are in the key level, but now the 1700 candle just confirm what? A swing point, because we have this candle 1, candle 2, candle 3, and candle 1 and 3 fail to take the low of candle 2. So this is a swing point. So I want to see the 2100 candle from the low of day or the 1 a.m. candle. And in this example, we have the 2100 from the low of day. It open, trade into this fair value gap, which is already reacted within, manipulated this swing low and closed back within the range as a reversal candle. Once we have this closure, it confirms now the low of the day, right? That means the low of the Tuesday candle has formed. So you can go in and trade the 1 a.m. 4-hour candle. You can drop down under 1 hour time frame, but first you need to confirm this low of day with an SMT, because you know that one day to open, trade into a key level, form an SMT, then expand away. The low of day should be confirmed with an SMT. In this key level, is there any SMT within it to confirm the low of day? I don't see any SMT here. If the SMT is not on the 4-hour time frame, I can check the 1 hour time frame for any key level that can present us the SMT. So looking at it here, do we have it? Yes, we do have this low. You can see this swing low here. Actually took the trade this day. So we had this low. It is right here. You see that? There is an SMT here with this low, this swing low. So you can see we had a lower low on Euro USD. The same time we have a higher low on GBP USD. So this is an SMT confirming what? The low of day, right? With the 2100 4-hour candle confirming the low of day. So we can now be confident that the 1 a.m. 4-hour candle is going to deliver to this high. So dropping down the 1 hour time frame to profile that 1 a.m. candle. So where does the 1 a.m. candle, the 1 a.m. candle from start? It opened here at goodness, I don't have 1 a.m. here. The 4-hour candle opened here, trade into this fair value gap. We had this fair value gap here. I don't know why I can't grab this. You see, we have a fair value gap here. So we open, trade into that fair value gap. I want to see now an SMT with this key level, if it's going to confirm the low of the 4-hour candle, 1 a.m. candle, right? So is there any SMT with the key level? There is no SMT there. Now, if I don't see an SMT on the hourly time frame, I can drop down on the 30-minute. But I don't want to trade the 1 a.m. candle, right? I want to trade as from 2 a.m. because that's where my key zone is at. I want to trade the 2 a.m. candle. So prior to 2 a.m., there is no SMT confirming the key level. So I drop down to the 30-minute time frame. And do we have any SMT? Is there any SMT? Yes, we have an SMT in this fair value gap here. There is a fair value gap here. You can see that. And we have a lower low here. At the same time, we have what? A higher low there. You can see that. There is an SMT here with this candle. We have a higher low and a lower low here. At what time? 3:30. So once this 3:30 candle close, I can trade what? The 4 a.m. candle, right? And this SMT now is what? It is in the form of strength switch. You see that this asset was a stronger asset. Now it has momentarily switched strength to become the weaker asset, right? Because we made what? A higher low here on this asset, but now we've formed another SMT in the form of strength switch from a fair value gap, and it is a lower low, right? It has switched strength now to become a weaker pair. Now, giving room for what? For this weaker pair to catch up to our draw on liquidity. So this asset, now that was once the weaker asset, momentarily switch strength to become the stronger asset or the stronger pair. You see that after the strength switch, that is where we had that huge delivery into our draw on liquidity. You see that? We only had that delivery into our draw on liquidity after the strength switch. You see that? We manipulated here from the SMT, didn't really expand much or reverse away from it. We just BS around, and once we had this strength switch in this fair value gap, which is after displacement, we formed the fair value gap, then we had a strength switch within it, then we had that energetic delivery into our draw on liquidity after the strength switch, which is a gap filled, right? The same thing that we had on the weekly time frame. Let me take you back there. It's the same thing that we had here. We had this SMT here, right? We had this SMT here. And at what time did we deliver into this draw on liquidity? It was after we had a strength switch with this fair value gap, right? Are you following up this? We had this SMT where this asset made a lower low and this asset made a higher low, but we momentarily switched strength and this asset made a lower low at the same time where this asset is making a higher low. So the strength switch was a trigger for price to deliver to this draw on liquidity. So that's the same thing we had here, right? That's the same thing we had here. After the strength switch, price could then deliver to this draw on liquidity, right? So if you're here and you see the strength switch, you could drop down under 3-minute time frame. Let me take a look at this. You could drop down after this strength switch here with this 3:30 a.m. candle. After it closes, then you can trade the 4 a.m. candle. You need to drop where? On the 3-minute time frame, since you are on the 30-minute time frame. You're trading away from a 30-minute key level. So you could drop down on the 3-minute time frame and look for what? Reversal signature. And you had one here, which is expansion to the key level, expansion away from it, and confirmed by CSD. So once you have it, and we had that here, you can see we had that CSD here. Once you have it, you can go ahead and take a trade, right? Putting your stop loss where? Below the recent swing low, and you can target your draw liquidity, and you rest assured that it's going to deliver, right? That's how you could trade the Tuesday candle. And let's take a look at the Wednesday candle now. How could you trade it Wednesday? Let me take this off. Take a look at Wednesday. So this is Wednesday. So Tuesday expanded away from the low of the week, right? But did not reach your drawn liquidity yet. The drawn liquidity is still open, right? You can see this failure swings still open. So that means Wednesday will expand, right? And knowing that, you need to profile the Wednesday candle. How do you want the Wednesday candle to form? You want it to open trade into a key level, then expand, right? So we drop down the 4-hour time frame. The Wednesday candle opened at this time, 1700. Let's see. So you'll see we had this manipulation late on the Tuesday here. I'll show you what happened here. we have this fair value gap. There is a fair value gap here. After we engage with this, that was Tuesday's low, right? If you're following up. And we created a fair value gap here. You can see that we created a fair value gap here on Tuesday. The Tuesday candle. This is the 1 a.m. 4-hour candle we traded on the Tuesday, right? And the 5 a.m. candle didn't really do much. The 9 a.m. candle expanded. So the 2100, the 1 a.m. and the 5 a.m. candle formed a fair value gap. And the 9 a.m. candle retraces back into that fair value gap and formed what? An SMT. With a key level, right? We form an SMT in that key level. So if you form an SMT in the key level and that SMT is going to hold, what should happen? We should get a reversal, expansion away from that key level, right? So that's where we have the 1300 candle expanded away. Now, this Wednesday opened as a C4, right? Because we have C1, C2, C3. So it opened, there is no reason for it to retrace back into this swing now, because we are coming from a key level and we haven't engaged with anything relevant. So we just need to expand. That's why you had this 1700 candle just open and expand away from this initial manipulation, because you already manipulated this fair value gap, form an SMT within it. And now what is left? We had this first candle expand, which is candle 3. Now candle 4 should do what? It should expand also. So that's why you had this huge expansion into this draw on liquidity, but I wasn't expecting it to get right up to this level, to be honest. Let's take a look at it within this 1700 candle. Was there any strength switch to trigger this expansion away, which is candle 4? How can we profile that 1700 candle? How did it form? Because each candle has its profile, right? We are profiling the daily candle here on the 4-hour time frame, where it needs to open trade into the key level. But since the daily candle is open within a 4-hour swing, which is from a key level confirmed by an SMT, so that is why you had the day just open and expand away, because there's nothing to trade back within before expanding. Now you need to profile this candle 4, because the 4-hour candle needs to open trade into a key level within candle 3 before expanding, right? So we drop down on the 4-hour, on the 1-hour time frame to profile that. So that key level in this example is a fair value gap. You can see that here. We have a fair value gap here. So this is a 1700 candle. You can see that, right? And we had what? A strength switch. SMT, which is a gap filled SMT. You will see that this asset, right, that manipulated, formed a lower low, the same time where this asset, this pair rather, is forming a higher low. Now we displace away from this key level and form what? A fair value gap. Now the 1700 candle open, trade into that fair value gap, manipulate and form a strength switch SMT. After we formed that SMT, that's where we had this huge delivery into our draw liquidity. You see how these things repeat every day, right? So we have the initial manipulation here, form a lower low, go back on the 4-hour time frame so you can see it perfectly. So we had this fair value gap, right? So we manipulated it and the next candle expand. So the 1700 candle what? Should expand away. Now the 1700 candle doesn't just have to open and expand unless we have the same signature within this candle, which is we already manipulate the key level and reverse away from it, and there is no need for this, for the early hours of this 4-hour candle, to engage within the key level again. But if that is not the case, then it needs to trade into the key level within this previous 4-hour candle, form an SMT within it, then expand away. That is why we had this here. We had this price open, right? Trade into this fair value gap, form a strength switch SMT, and after we get a strength switch, that's when we had this huge delivery into our draw on liquidity. So, and I think after that, that was it, because once I select my weekly objective have been met, then I don't want to trade. So once we deliver into this key level on Wednesday, Thursday, and Friday, it doesn't have anything to do with me again. I'm done for that week. But actually, Thursday and Friday actually had a good PA again, but we're not going to look at that here. You can go and find out what happened with Thursday and Friday yourself. So I think that this rounded up for this video. If you have any questions, leave them in the comment section, and I really do appreciate those of you that have liked, shared the videos, and always comment. To be honest, I really do appreciate you all. So see you in the next one, and you do